Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies, so you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, June 7th. I'm your host, Jesse Allen. Great to have you here with us as always. MarketTalkAg.com. That is our home on the web. The all-new MarketTalkAg.com. You can find a great resources there, including all of our streaming platforms, our YouTube channel, ag news, market information, weather, much more. It's all online at MarketTalkAg.com. Got a lot to talk about here as we start off a new week and look at our market trade. Let's bring in our good friend Bryan Doherty with Total Farm Marketing. And Bryan, good afternoon to you. How's things up in Wisconsin today, Bryan?
Things are interesting. I'm going to say generally dry. We weren't looking for any rain today, but there's a few scattered showers, so we'll take what we can. But just took a minute and looked outside. Doesn't look like there's a whole lot more than to wet the pavement, and we're just in one of those patterns where we're struggling, just like a lot of people in the upper Midwest, just can't get a good string of showers, or at least one good, strong, heavy shower. Just can't get it right now.
Yeah, and we talk about the dryness concerns, and you mentioned, where you're at in Wisconsin, dry up there, and you shift that conversation the farther west you go, it's drier and drier and drier, and that's really kind of been the storyline here the last few days in this market trade, Bryan. And as we look at it today, we came off weather models, so Sunday night, overnight, impressive gains, and then kind of gave some of that back here today. And I heard a lot of talk of some farmers selling off that Sunday night rally. Is that kind of what you heard here as we went through the day today? Because we were kind of split between old and new crop today.
Sure, you hear some of that for sure. And farmers last time saw how quickly the market disappeared. Let's call it disappeared. That all of a sudden we had a string of days up, and then it turned over, and all of a sudden, before you know it, beans are down $1, corn's down $1. And you look back and go, wow, I wish I would have had some orders in there. So I think, as what most people do, they kind of learn from the immediate pain. The immediate pain was, hey, I could have had some better prices. So you put your orders above, and those are triggered. I think a little more to the story there, maybe the idea that the fund money, the managed money, is a lot of it in the markets. At some point needs to roll out of these July contracts. And so as July doesn't hold its strength, the funds, I think, run their stop up underneath pretty quick. And the next thing you know, you're seeing July come under some heavy pressure. At least that's a story I'm going to stick with today. We've got so much volatility. Typically, you don't give up inverted markets unless you see something change. I'm not really seeing anything change in the weather, though. That's the big thing, is you've got a portion of the crop ahead that could be. It's June 7th. Let's look at it. It could be in peril. There's some crop that just needs moisture soon.
Yeah, and that's a great point. And to your point about the fund money maybe rolling out, I think we kind of saw that situation with the May contracts. Is some of those funds waited a little too long almost to roll out of some of those contracts and some of that managed money position. So maybe they're learning from their mistakes. Maybe they're getting out a little bit sooner as well. That could be something at play here, Bryan.
Yeah, for sure. And anytime you get these inverted markets, it's for good reason, either tight supply, strong demand, or combination of both, or something where the market really puts the emphasis on that. And when I say emphasis, it's almost like emotion. The emotion on the front months, and emotion could get very erratic. So we saw some real erratic markets today in beans and corn. As an example, July beans closed at $15.60 and a quarter, with a high of $16.23. So that's a lot off the high. That's what, 23 cents off the high. That's a lot. November beans 40 cents off the high. Geez, there's some years where we're lucky if we get 60 cents or 40 cents on a rally for most of the year.
Yeah, that's a great point you make. And you mentioned not seeing much change in the weather forecasts. I'm not seeing much either. About the only change I may be seeing is that we're talking a chance of some showers working their way into the Dakotas, but they're going to be fairly scattered in nature. They're talking the Canadian prairies getting some moisture, but really not a lot of change in this weather forecast. So to me, it was just kind of a curious day. You kind of alluded to it, watching the markets move the way they did with nothing really changing in the weather.
Right. And unless somebody seems to know something that we don't, but to your point, there's probably a pickup in farmers selling. And as you get on these old crop contracts, as you get further down the road, those are in them realize too that the volatility can pick up and likely we're running their stops up underneath too. And as the market tripped down, they're sellers, not sellers because all of a sudden negative. They're just sellers because the market tripped their order. And when you have a number of those, you can see how it can add up. I think the big story for the week, though, will be forecasts. We got a USDA report out on Thursday. That'll say some things. It'll probably downgrade the Brazilian corn crop. They continue to struggle with dry weather. Most estimates are less than the USDA 102 million metric tons out of Brazil, some down to around 90. So that'll be the kind of the big report this week. And of course, each forecast is big right now.
What am I looking at here this week? If I'm kind of looking at my marketing plan, I got that long term plan in place. Hopefully, either that medium range plan in place, but maybe I'm looking at a week like this where we're trading in volatile weather markets, different forecasts. We have that USDA report coming up. Anything if I'm a farmer, I should look at with my marketing plan here this week on the grain side, Brian?
Yeah, first let's start with the day like today. Today we had some big overnight trade, and again, never hurts to put your orders above the market, kind of your wish list orders. They might have got triggered last night. All of a sudden, you look at, this big change in beans. If you have to put something, let's say at $16 last night or $16.20, all of a sudden $15.60. That's a lot of volatility. So one, keep in mind your price orders. Those are orders that you set a price and hope that the market can get to them and hit. Two is time of year. We're at the 7th here, so I'll write this in my weekly or my report tonight on corn. In fact, I already wrote it, and that is the good news is it's June 7th. The bad news is it's June 7th. It's a really precarious time. So from a calendar perspective, though, historically, you've got to watch this really closely. So what does that mean? Well, if you're kind of as far along as you want to be on sales, but the price is driving you nuts, well, then budget for some puts and buy some puts. They're going to cost more than usual. We're at a time of year where this week, next week, the week after, if the forecast change, if the actual weather changes, all of a sudden things go down. Everybody looks back, and it's always just a short-term scare. And it drove the roots down deeper, and now we got big crop and all of this kind of business. So keep in mind time of year and what kind of tool might be best suited to shift the risk for you. If remember, when you're a producer, you're an owner, so you want to shift the risk of that ownership with either fixed risk or just lock it in. If you lock it in, that's through a forward sale, hedge to arrive, and then look at a retained ownership position on that. Look at something like a call option or a bull call spread. So lots of strategy that a farmer should be thinking about, especially when you're winding down field work here. Take some time and look at it.
Some great advice there for sure. Let's move let's talk livestock a little bit here. And hog market was fairly decent today. We keep our eye on this hog market that just has solid demand. I know exports last week were low, but overall demand in this hog market continuing to look good, and that seems to be the one shining star of the livestock sector right now, Brian.
Well, it definitely is the shining star for sure. It's funny how you have cattle kind of struggling to go in one direction and packer capacity, and then you got hogs going the other direction, and it makes you kind of wonder at what point, do you see this whole thing really flip, and maybe even flip kind of hard. It's pretty unusual to see the price of hogs higher than the price of cattle. And so those things typically, when I say it's unusual, that should ring a bell. Well, that's not very often, right? So it's not very often. It's kind of unique. Well, kind of unique doesn't usually last. So these things usually don't last long. Wouldn't be surprised to see that flip over. I'm not trying to outguess this, but the hog market's had a long run. It's had a good run. It's been just very steady uptrend here, but at some point it starts to price itself out of the market. And my guess would be as packers gradually get caught up on the beef sector, and there's more beef available, that hogs are just going to take a natural turn to the lower. And on top of that, we've been in a strong uptrend for quite some time. And not that I'm trying to outguess this, but I got to think that somebody out there is trying to keep sow herd or at least gilts back. And I know people say, well, they get mixed into the herd and actually your sow herd's lower. I'm not so sure about that. I think where there's money, anytime you start making money, and I'm sure the hog producers are making money despite high corn, supply has a way of figuring out how to grow itself.
Very, very true. And on the flip side, you mentioned packer capacity, supply on the beef side. That's we're looking at a lot of issues there right now. But I was pleasantly surprised on the board today. Our close, we did have a fairly solid close there at the end. I noticed feeder cattle, live cattle kind of came back towards unchanged. So maybe a little bit of a silver lining to a market that's just been struggling as of late, Brian.
Yeah, the cattle market's been struggling, the cash, the futures, and that, but not the other side of the pack run.
Mhm.
So those things have a tendency to straighten out as well. I think from a big picture perspective, if we think back 3 months ago or 6 months ago, we kind of looked at this whole COVID thing. There's general field confidence. Hey, February, March, April, start to see, the COVID numbers go down, get towards summer. Well, that's really what's happening, and there's a lot of pent up demand. It looks like for a lot of things, and so. One of those is for people to get out and get about, start getting back to some normal routines. And I guess if it's any indicator in the general area that I live in, seeing some of the chain brands as well as privates, man, their restaurants are busy. So, and their steaks restaurants. So I think
Mhm.
people are back at it. So.
I think so as well, and I think we'll start to gradually see some of that shift. And I know a lot of folks have been pointing at that third, fourth quarter on the beef side, thinking that that might be where we see this cattle market, the future side at least, and the cash side maybe turn itself around as we get towards the end of the year.
Right on, and that's exactly what we would expect to see too. Um, between, I think there's three things between the vaccinations, just the idea that this bug may be starting to run its course, and then this whole idea of people back to spending money. All looks good. All of it looks good for demand for beef, pork, all the products. It just looks good for it.
Definitely. Dairy market, Brian. Any updates for us as we start the new week?
As you look at kind of like let's look at September milk consolidated after, touching $20. We took off about $2 on that, so about 20, uh, $2 on the front months. As we look to the back months, you look at like December milk, everything's off the high a little bit, but actually holding there pretty good. What you're seeing is probably two things that are starting to develop. One is the high price of corn is probably creating a different mix into the herd. So you're seeing some cows that are probably going, and maybe some heifers that are going as well. So we kind of think that the herd size probably leveled off due to the feed side of things and the uncertainty with summer weather. The demand side of things, that's been erratic. But you look at this, the market had a couple of big run ups. It's been very erratic, drop off here. Looks to us like it's starting to stabilize now. I've argued that the high price of milk cures itself and that we produce more. The the exception to that is when you have high input costs. And right now, feed's not cheap, so it'll self-regulate itself. Cattle milk market may have some downside to it, but now it's probably limited.
Brian, any other final thoughts you have for us today? I know we covered a lot in a short amount of time. Anything else you want to touch on or reiterate for us today?
Well, just again to your grain farmers that are hearing this or seeing this, and that is, don't be afraid to take action. Waiting around to get enough news to make a decision, that can be really difficult. We saw July corn, just this one sticks in mind. We saw that lose 71 cents in 2 days. December corn rallied and then it dropped $1 in a very short period of time. Now it's come back. So these things are moving. They're moving fast. They're moving hard. As you kind of get the planting, spraying, whatever behind you, just take a few minutes and really look at this and have some really critical conversations with those that can kind of throw things at you that make sense for you, and be strategic and not so much try and outguess whether this drought is going to, exasperate itself or just all of a sudden die one day and the whole weather pattern changes.
Well, Bryan, I know if producers need a little advice, need some questions answered, they can reach out to you and the team there at Total Farm Marketing. A lot of great ways to reach out, but I know you always you're a proponent of, you prefer that good old fashioned phone call, Bryan.
I'm kind of old school, right? In a phone call, I can kind of hear things in that call other than just reading words, and so like to hear that, like to hear from people, like to get feedback on conditions and put all that in some realistic context and make sure that we're putting ideas and strategy in front of people that have good value, make sense, regardless of where the market goes. What we did when we look back, those decisions were good decisions.
Definitely. Give Bryan a call today, 800-334-9779. That's 800-334-9779, or you can find all the info online, totalfarmmarketing.com. Bryan, appreciate the time as always. Thanks for joining us. We'll talk to you next week.
Always my pleasure. Thank you, Jesse. Good to hear from you. Good seeing you.
Yeah, good seeing you as well. Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Monday, June 7th edition of the show. I'm Jesse Allen. Have a great afternoon.